This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
Statements of cash flows. Now, the main financial statements we looked at several times. The income statement and the statement of financial position, the balance sheet. However, limited companies are required to produce an extra statement to give shareholders more information, which is known as a statement of cash flows. And it is exactly what it says. It's a statement showing over the period, generally over the year, what cash the business has received and what cash the business has spent. And the reason for it and the relevance, just look briefly at example 1 on page 89. And you'll see on page 89, I've given you a statement of financial position at 31st December 2008, and, as is normal for limited companies, I've shown comparative figures. I've shown the balance sheet at 2007 as well. Now, although we'll look through it in detail later, an ordinary shareholder looking at this, a non-accountant, might notice the cash and see that the cash at the end of 2008 is 45,000, whereas at the end of 2007 the cash was 64,000. So the cash balance has fallen quite substantially, and yet there's an income statement at the bottom showing that the business made a profit after tax of 61,000. Now, it may be obvious to you as an accountant, but to an ordinary person, they might say, well, the 61,000 profit, where's it all gone? Why has the cash balance fallen from 64 down to 45? Because, in fact, not only did the business make a profit, but if you look on the balance sheet under capital and reserves, the share capital has increased by 50,000. The company's obviously had an issue of shares. So they've raised a lot of money by issuing shares, they've made a lot of profit, and yet the cash balance has fallen. Well, I say it may be obvious to you, but for an ordinary person, it's not so obvious. You can't expect them to study the balance sheet in detail. I mean, one thing that's fairly obvious to us is non-current assets have increased. That's where a lot of the money's gone. But to help shareholders understand, we're going to do this statement showing what cash has been received and what cash has been paid. Now, the layout of the statement is defined in the accounting standard, and although for different types of businesses different layouts are allowed, the standard layout, the one that you should be aware of, is on page 88. And there's the full layout. However, it's not a question of learning line by line, but what you must learn are the three main headings, because all the cash flows, the receipts and payments, go under one of the three headings. And the three headings, first of all, there's cash flows from operating activities. And although we'll look in more detail after, essentially what this is, your operating activities is your ordinary trading. It's effectively the cash from profits. Business makes a profit. Now, just because you make a profit of 100,000 doesn't mean you've had cash of 100,000 for all sorts of reasons. But what we're trying to get under that heading is how much cash did we actually generate from our profits. So that basically is the first heading. The second reason a company receives or pays cash is cash flows from investing activities. And what we really have to hear, without for the moment going in great detail, but the main item here, by investing activities we're talking about buying and selling non-current assets. Clearly, if you buy non-current assets, you're paying out cash. So it's the purchase and sale of non-current assets. And finally, the third reason a company pays cash is from financing. Cash flows from financing activities. And what we mean here is really two main things. The first thing that will come under this heading is if a company issues new shares. If they issue new shares, they've received cash. It goes under this heading. So, new issue of shares. But the other place a company might raise long-term cash, long-term finance, is by taking a long-term loan. If a company takes out a long-term loan, they've more cash in the bank. Or similarly, when they come to repay the loan, they've less cash. And so, the other item is long-term loans. Either taken when you've received cash, or repaid, in which case you've paid cash. Now those are the main items. Under each heading there are one or two other little things we might need to show, which we'll sort out later. But you must learn the three headings. Only those three. And be clear, or partly from what I've said, but partly shortly from an example of what it is we're showing under each. But under each heading we work out the net cash paid or received. The final total of those will be the net increase or, in fact, decrease in cash balances. On the pro forma it says cash and cash equivalents. It's all cash balances. What we mean by cash equivalent is that what a business might do, rather than keep lots of money in the bank, they may put some of it into short-term investments. Well, if it's a short-term investment, then effectively for these purposes it's cash. So that would be the increase-decrease in cash. And just to, if you like, prove we've got it right, this should explain the difference in the cash balances. So we'd take the cash balances at the beginning of the year, brought forward, add or subtract the increase-decrease, and that'll give us the cash balances at the end, or carried forward. So there's our statement. It'll be showing receipts and payments under those three headings. And the purpose, it will explain the change in the cash balance over the year. Now for the exam, he cannot ever expect you to do a full cash flow statement. You'll see when you come to look at some test questions that what he's really testing you on is that you know the three headings and you know what items go under each. But the only way we can check properly is by actually doing a full question. So in the next session we will actually work through a full example, example 1. It will take quite a while, but it's important you see it, not because you'll ever be having to do it, but it's the only way you can be certain that you know what goes under each heading, how we arrive at the total under each heading, and any little part of this, any little extract, could be a test question in the exam.